The NYSE parent just put another $600 million into Polymarket Intercontinental Exchange. The parent company of the New York Stock Exchange has invested an additional $600 million in Polymarket, according to multiple reports published on March 27, 2026. The fresh capital follows a $1 billion investment, ICE, made in October 2025, bringing the company's total stake in the crypto-native prediction market to approximately $1.6 billion. The announcement comes during a broad market pullback, with BTC trading at $66,532, down 4.1% in 24 hours. ETH at $119.87, down 4.1%, and the Fear and Greed Index sitting at 23, firmly in fear territory as of March 27, 2026. $1.6 billion from the company that runs Wall Street ICE is not a peripheral player dipping a toe into crypto. The company operates 13 regulated exchanges and clearinghouses worldwide, including the NYSE, ICE Futures Europe, and ICE Clear Credit. Its 2025 revenue exceeded $9 billion. When ICE writes a $1.6 billion check to a single crypto-native platform, it signals something beyond a venture bet. The October 2025 round valued Polymarket at roughly $5 billion. Whether the new $600 million tranche reflects a higher valuation or represents follow-on capital at existing terms has not been disclosed in the initial reports. Either way, ICE now has a stake in Polymarket that rivals the size of some publicly traded exchange acquisitions. This is also ICE's second major crypto investment in 2026. In early March, the company took a strategic stake in OKX at a $25 billion valuation, securing a board seat and plans to bring tokenized NYSE-listed equities to OKX's 120 million users. The two investments together suggest ICE is building a portfolio that spans crypto trading infrastructure and crypto-native financial products. Prediction markets under political pressure. The timing is notable. Less than 48 hours before this investment was announced, the bipartisan PREDICT Act was introduced in the House, aiming to ban members of Congress, the president, and senior officials from trading on prediction markets like Polymarket and Kalshi. The bill was triggered by a CNN investigation that found traders appeared to profit from advanced knowledge of U.S. military strikes on Iran, with 6 wallets funded hours before the February 28 attack, netting $1.2 million. ICE investing $600 million into Polymarket, while Congress debates restricting prediction market access, creates a split-screen moment. Legislators are flagging integrity concerns. The largest exchange operator in the world is increasing its exposure. The CFTC has also been active. Acting Chair Caroline Pham has argued for federal jurisdiction over prediction markets, pushing back against 19 state-level lawsuits that have challenged whether platforms like Polymarket and Kalshi can legally operate as event contract exchanges. A Tennessee federal judge issued a preliminary injunction allowing Kalshi to continue offering sports-adjacent contracts while the jurisdictional question is litigated. Why ICE keeps doubling down? Prediction markets have been one of the few crypto verticals to gain traction outside of the crypto-native audience. Polymarket's election markets drew over $3 billion in trading volume during the 2024 U.S. presidential election cycle. The 2026 midterms are approaching, and global event markets, from economic data releases to geopolitical outcomes, have continued to grow. For ICE, prediction markets may represent what options and futures were in the 1970s. A new contract type that looks speculative at first, but eventually becomes core financial infrastructure. ICE itself was built on this playbook. It started as an electronic energy trading platform in 2000, acquired the NYSE in 2013, and now generates the majority of its revenue from data services and clearing, not from the trading floors that made it famous. The structural appeal is straightforward. Prediction markets generate continuous trading volume, require clearing infrastructure, produce proprietary data, and attract a user base that skews younger and more digitally native than traditional derivatives markets. All 4 of those characteristics align with ICE's existing business lines. Polymarket and Kalshi's CEOs have also recently invested in the same $35 million VC fund targeting prediction market startups, signaling that even competitors see the sector as an ecosystem worth building rather than a zero-sum fight. The regulatory fork in the road. The prediction market sector faces a genuine regulatory fork. On one path, the CFTC establishes clear federal oversight. Prediction markets get treated like regulated derivatives, and institutional capital continues flowing in. On the other, state regulators or Congress impose restrictions that limit contract types, ban certain participants, or force platforms offshore. ICE is clearly betting on the first outcome. A $1.6 billion position in Polymarket is not a hedge. It is a directional bet that prediction markets will be regulated into the financial mainstream rather than restricted out of it. For crypto users, the trajectory matters because prediction markets are one of the clearest on-ramps between crypto infrastructure and mainstream financial products. Polymarket runs on Polygon, settles in USDC, and requires users to interact with wallets and on-chain settlement, the same infrastructure that powers stablecoin spending and crypto card top-ups.